Welcome to the Pirls Stock Market Commentary video, your weekly window on stock market technical conditions, featuring the proprietary bull-bear point and figure market breadth summary chart for March 26th, 2017. Market breadth. With this past week's market fractional advance, our bull-bear point and figure ratio at 1.10 fell from 1.46 last week, losing strength but remaining within bullish territory. The total count of securities in bullish or bearish patterns decreased 5% to 3,105. The count of bearish stocks increased 12%, while the count of stocks in bullish patterns decreased 16%. The Pirls PNF Market Breadth Summary Chart shows us a market now 19 weeks in bullish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To subscribe to the weekly Pirls Stock Market Commentary via email, free of charge, simply enter your email address in the space provided and click Subscribe. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 106 points for the 10th decline in 19 weeks. At a negative 85.33 points, it continues below all 7 tops above plus 100 and continues above all 4 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in accumulation mode with average daily volume lower than the prior week. In the last 2 weeks, the Nasdaq had 3 accumulation days and 1 distribution day. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in accumulation mode on higher average daily volume. Momentum, now at a negative 72.63, down from a positive 154.81 last week. The CCI 20 daily, after signaling a valid zero-line reject long entry for Monday 313 open on Friday 310, fell below plus 100 and below our zero-line reject pivot entry point at Wednesday 322 close. The result of this trade simulation was a loss of 51.17 points on the Nasdaq, or 82 cents per share of QQQ. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 47 weeks ago, while the daily CCI 20 began a Woody's uptrend 18 weeks ago. The CCI 20 weekly has fallen to a positive 96.47 from a positive 119.08 last week. We await the return of the CCI 20 weekly to the plus or minus 50 range for another potential trade. Industry rotation, the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Summary: some tech and gold and silver and REITs on top. Oil services, banking, brokers, and retail on the bottom. Bullish computer hardware continues in the top 5. REITs has left the bottom 5 and entered the top 5. Oil services and oil continue in the bottom 5. Bearish KBW Bank continues in the bottom 5. Brokers has entered the bottom 5. Gold and silver continues in the top 5. Semis and disk drives have left the top 5. Focus this week from www.peakprosperity.com. Why this market needs to crash and likely will, by Chris Martenson. The following are some key points. Like an old vinyl record with a well-worn groove, the needle skipping merrily back to the same track over and over again, we repeat. Today's markets are dangerously overpriced. Our consistent view is that price bubbles always burst, which is why we predict the world's financial markets will implode spectacularly from today's heights, destroying jobs, dreams, hopes, economies, and political careers alike. When this happens, it will frighten the central bankers enough, or merely embarrass them enough, being the egotists that they are, that they will respond with even more aggressive money printing, and that will then cause the entire money system to blow up. Kaboom! First inwards in a compressed ball of deflation, then exploding outward in a final hyperinflationary fireball. See our recent report when this all blows up. It really cannot end any other way. Money is not wealth, it is merely a claim on wealth. Debt is a claim on future money. At the national level, the U.S. is already insolvent, meaning liabilities exceed assets. The U.S. has been spending far above our means for decades and decades, amassing a tremendous amount of public and private debt, as well as entitlement promises along the way. And yes, even nations can go bankrupt. But bankruptcy is a legal process, and it's not possible for an entire economy to enter a legal process. So, what do we mean when talking of a looming bankruptcy? Simply put, all those claims represented by all the debt and excess printed currency have to be destroyed or reduced to bring things back into balance. To understand just how dangerous this has become, we need look no further than this chart, stating there are too many promises that can't be kept. Our current debts and other national liabilities now total more than 1,000% of the nation's annual income, aka GDP. Referencing the chart above, it's sufficient to know that no country ever, in all of history, has ever dug out from such a mountain of excess claims. Never. Not once. There's no such thing as perpetual exponential expansion of anything. Even the universe itself is expected to one day stop expanding and eventually implode in a big crunch. Regrettably, though, that's the plan of every major central bank around the world right now. All throughout history, oppressors and genocidal maniacs have always developed elaborate psychological defenses to protect their fragile egos from the sort of crushing destruction that would result from a clear-eyed view of themselves and their actions. It's hard to transition from one's self-inflated view of being a virtuous superhero to admitting you're actually the source of untold misery and heartbreak. Our strongest advice is to position yourself for crisis before crisis arrives. Thank you for watching this week's Sand to Pearls Stock Market Commentary video featuring the proprietary Bull-Bear Point and Figure Market Breadth Summary Chart compiled by Donald Pearl, www.s2pmarketsignal.com. hoping that you are enjoying a peaceful and pleasant weekend, that you are looking forward to a prosperous and productive week coming up, and wishing you true success.